This is Charisse Walker, and this is everything you need to know about the changes in the housing market for the month of October. Calculated risk concludes that the annual growth rate of 19.7% is probably close to a peak, and that the year-over-year price increases will slow down as the year continues. Closings are set to decline roughly 10% year-over-year in the second half of 2021, and home price appreciation is on the cusp of flipping to a decelerating trend. Again, there will be an appreciation trend, just in a slower, more moderate pace performance rate compared to what we have been seeing in the previous months. This being said, prices are not necessarily declining, and they are just appreciating slower at about 32% in the next 5 years. So buying now before prices continue to exceed expectations is important. Buying now is really mission critical. When we forecast the fourth quarter of the market with the pandemic being in place, fall is usually the start of the slower season, but we all know this has not been a normal year due to the circumstances. Potential buyers are seeing a slight rise in inventory, while mortgage applications jumped over 7%, which is the highest level we have seen since April. It may seem like things are slowing down, but this is only because the last 2 years have not been normal. However, 2019 was the last normal year, and we are already doing exceptionally better in existing home sales in comparison. When will listings peak? They can continue to grow. It could continue at a rate it is at like it did in 2020, or fall, but there are 3 reasons professionals like myself think the listings will continue to increase throughout the fall and into the winter months. First, there is pent-up selling demand, and homeowners are starting to feel more comfortable with the idea of putting their home on the market since the pandemic is shifting and as more people are getting vaccinated. Therefore, having people into their homes for open houses or property tours is less of a potential risk. And they're also not afraid that they won't be able to find a home. Number 2, new construction is taking place and starting to grow more rapidly, allowing for more options for potential buyers and current homeowners to consider when they sell. There is no longer a lack of options compared to the options other sellers have in the past. And number 3, it is the end of the forbearance and is creating new listings. Do not worry, this will not lead to a wave of foreclosures, but it will allow homeowners to be able to sell their homes and have enough equity to more than cover the expenses of actually selling. So as far as interest rates are concerned, it is possible that in the next year we could bring prices down that may result in further economic, financial, and confidence challenges to also drop. But in Utah, I doubt that. These drops or flattenings are nothing to concern ourselves with, as they will not come close in comparison to the crash we saw during the Great Recession. Freddie Mac shows there is a 3.01% rise in mortgage rates, and many factors lead to this increase. The economy is recovering, not as quickly as we would like, but it is slowly making a comeback. There will be no sharp spike in the rise of prices, just a gradual growth inching back up, making interest rates rise a bit. The buyer purchasing power will cost more and financing will be harder as the rates also rise. Again, this is Charisse Walker, and offering a uniquely different and shockingly better way to sell real estate. Have a great day.